The British pound sterling, once the undisputed titan of global finance, has a history as rich and complex as the empire it once represented. For centuries, the pound was more than just currency. It was a symbol of British power, global reach, and economic dominance. But how did this iconic currency rise to such heights, and what caused its dramatic fall from grace? Today, we'll explore the financial history of the United Kingdom through the lens of its most famous export, the British pound. The pound sterling's story begins over 200 years ago, making it the oldest currency still in continuous use. Its origins lie in Anglo-Saxon England around the year 775, when King Offa introduced silver pennies. The term pound was a unit of weight, referencing a pound of sterling silver, which equaled 240 silver pennies. These coins became the foundation of Britain's medieval economy and laid the groundwork for the currency system we know today. For centuries, the pound's value was tied to the silver content of its coins. The simplicity of the system helped build trust in British money, encouraging trade and establishing the pound as a pillar of the British economy. But by the 17th century, Britain's expanding global ambitions needed something stronger, something more stable than silver. The Industrial Revolution and the growth of international trade demanded a currency system that could support massive financial transactions across continents. This led to the gold standard, introduced in 1816, under which the pound's value was fixed to a specific amount of gold. For the first time, the pound became a currency backed by precious metal reserves, rather than just the metal content of coins. This was the age of the British Empire, and the gold standard helped fuel its expansion. London became the epicenter of global finance, and the British pound became the world's reserve currency. Countries held their wealth in pounds, conducted trade in pounds, and measured the strength of their economies against the pound. By 1914, roughly 60% of the world's international loans were issued in British pounds. But no empire lasts forever. The outbreak of World War I in 1914 marked the beginning of the pound's decline. War is expensive, and Britain was forced to abandon the gold standard to finance the conflict. This decision set off inflation and created deep structural weaknesses in the economy. After the war, Britain attempted to return to the gold standard in 1925, but the world had changed. The country's debts were high, its industries less competitive, and its global influence already beginning to wane. The return to gold was short-lived. By 1931, the global Great Depression and mounting financial pressures forced Britain to abandon the gold standard for good. World War II only deepened the crisis. Britain financed much of the war through borrowing, especially from the United States. The once mighty pound was weakened further, and at the end of the war, the world's financial system was restructured. The Bretton Woods Agreement of 1944 established the US dollar as the new global reserve currency, a title once held by the pound. The British pound had lost its crown. But the story didn't end there. In 1949, the British government devalued the pound by 30%, dropping it from 4,003 to 2,085. This wasn't a small technical adjustment. It was a public admission that Britain could no longer afford the luxury of a strong currency. The economy was struggling with post-war recovery, rising imports, and diminishing gold reserves. The devaluation marked a psychological shift in British national identity. For a country still clinging to memories of imperial power, the pound's fall from grace was a painful and visible sign of decline. And it wouldn't be the last time the pound would be devalued. In 1967, under Prime Minister Harold Wilson, the government once again devalued the currency, this time from 2,080 sounds to $2.40. Wilson famously told the British people that this didn't mean their pound in your pocket had been devalued, but for anyone traveling abroad or importing goods, the reality was clear. As the world moved away from fixed currency systems, the era of floating exchange rates began. The final blow to fixed exchange rates came in 1971, when U.S. President Richard Nixon ended the dollar's convertibility into gold, effectively dismantling the Bretton Woods System. The British pound became a floating currency, its value determined not by governments but by global markets. The 1970s were a tough time for the British economy. Inflation, labor strikes, and oil crises sent the pound on a roller coaster ride. In 1976, Britain was forced to seek a loan from the International Monetary Fund. For the first time in its history, the UK had to turn to an international lender to stabilize its currency. It was a moment of national humility, but the 1980s brought a new approach. Under Prime Minister Margaret Thatcher, Britain adopted monetarist policies aimed at controlling inflation and modernizing the economy. Interest rates were raised, spending was slashed, and financial markets were deregulated. The Big Bang financial reforms of 1986 transformed London's financial sector into a high-tech, competitive global marketplace. The pound rebounded, but the age of currency speculation was just beginning. In 1992, the British pound faced one of its most dramatic crises, Black Wednesday. Britain had joined the European Exchange Rate Mechanism, or ERM, in an attempt to stabilize the pound against other European currencies. But financial markets, led by speculators like George Soros, believed the pound was overvalued. The British government spent billions trying to prop up the currency and raised interest rates to historic highs. But the market pressure was unstoppable. Britain was forced to withdraw from the ERM, and the pound plummeted. Soros reportedly made over £1 billion from this single bet, and the UK Treasury suffered enormous losses. Despite the immediate fallout, leaving the ERM arguably laid the foundation for Britain's economic recovery in the mid-1990s. A weaker pound made British exports more competitive, and the economy eventually rebounded. As the European Union moved toward the introduction of the euro in the late 1990s, the UK faced a defining question. Should it abandon the pound for the new single currency? After careful study, Chancellor Gordon Brown laid out 5 economic tests. The verdict was clear. Adopting the euro wasn't in Britain's best interests. The pound remained, though its global dominance continued to fade. Then came the global financial crisis of 2008. Like many currencies, the pound took a severe hit. At its pre-crisis peak in 2007, the pound was trading at over $2.11 against the US dollar, but by early 2009, it had plunged to around $1.38. The Bank of England slashed interest rates and injected liquidity into the economy through quantitative easing. While the pound weathered the storm, the crisis highlighted how much the world had changed. The days when the pound ruled global finance were long gone. The most recent shock came in 2016, when the United Kingdom voted to leave the European Union. The Brexit referendum triggered an immediate and steep drop in the pound's value, losing 10% overnight. The uncertainty surrounding the UK's future trade agreements and global standing kept the pound under pressure for years. The decision to leave the EU fundamentally altered Britain's place in the world, and the financial sector in particular felt the brunt. London's dominance as Europe's financial capital has been challenged, and the pound remains a barometer for how global markets perceive Britain's political and economic stability. Today, the pound sterling is still one of the world's most traded currencies, consistently ranking behind the US dollar, the euro, and the Japanese yen. But it is no longer the anchor of global finance. Its fall from grace reflects Britain's transition from imperial superpower to an influential but modest-sized player in the global economy. The story of the pound teaches us that currency strength is more than just numbers on a screen. It's about political stability, economic confidence, and international influence. As the world moves toward digital currencies and new economic alliances, the British pound faces fresh challenges, but also new opportunities. The rise and fall of the pound mirrors the rise and fall of the British Empire itself. Its future, like its past, will be shaped by the choices of leaders, the forces of global trade, and the unpredictable winds of history. Thank you for watching News Nexus. If you enjoyed this deep dive into financial history, don't forget to like, subscribe, and share your thoughts in the comments. Until next time, stay curious and stay informed.